Welcome back, everyone, to another episode. Today, I'm going to be talking about a topic that's pretty important given the upcoming elections, and it's what a Trump or Biden administration means for the U.S. equity market and generally just the broad economy overall. Let's get started. Welcome back, everyone. So today, this will be an interesting one. I want to talk about so obviously the upcoming election in about 3 to 4 weeks, right? And I think we have enough data and understanding to know generally what's going to happen if Biden becomes president when it comes to taxes and regulation and all that. And then, of course, if Trump continues to stay in the White House, what that means for the taxes, regulation, trade policy, and whatnot. And there are 4 categories that I want to talk about. And one thing to consider too is the importance of the Senate, right? If the Senate does go to the Democrats and they need about 4 votes, or I guess 4 new seats for that to happen, which it is a potential, that would shift things quite a bit. But generally, what's interesting, and I was talking with a guy at Fidelity who's one of their lead strategists, is that both parties, whether they get elected or not, the economy overall is not going to differ all that much, and I'll go into some of those points in a second. And I guess what I'm saying is on one side, where for example Biden would be increasing taxes versus on the corporate rate from 21 to 28%, where Trump would not. Trump is also not very trade friendly, where Biden probably would be. So we'll get into those details one by one. And the first one I want to talk about is taxes. Now, again, this all assumes that the Senate stays majority Republican. If it flip-flops, then I have my notes here, Trump winning, right? Obviously, we know that taxes are going to be favorable for the economy and the equity market, right? There'll be a lower tax rate both on a personal and a corporate level. Therefore, you would expect to see more income pass through to people and, to the pockets, and therefore more spending or investment. Now, if Biden wins and the Senate remains Republican, I think the taxes would probably remain pretty close to what they are today. I don't think Biden would have a very easy time passing any sort of tax reform. In fact, he's already mentioned that he's not going to, repeal most of the Trump taxes, just some of them. Okay. Now, if Biden wins and the Senate goes Democrat, I think it's a negative situation for the markets when it comes to taxes. Very easily, Biden would increase taxes, probably both on the personal and the corporate level. That's obviously going to hinder and hurt the investment. It's going to hinder and hurt the ability to spend more money. And that's just basic economics, right? And by the way, I'm not trying to side with anyone here. I'm just simply calling out the facts. These are the facts. So I'm aligning with neither candidate, okay? The next one is regulation. Obviously, we know that high regulation means higher cost of doing business. I have land in Arizona, for example, that I'm developing, and it's a relatively low regulatory state. I had the option to develop in California, but one of the big things we decided on is look, we don't want to deal with the regulation of California. It's too much money. It's too much of a hassle. Let's go to a pro-business state. And you're seeing that across the nation. Companies and investment dollars are following the low regulation states. And so if Trump stays in office and the Senate remains as Republican, expect to see favorable terms when it comes to regulation for business in the markets, meaning low regulation, easy flow of capital. You're going to see business activity remain pretty robust. Okay. Now, if Biden wins and the Senate remains Republican, I think you're going to see generally just more regulation, right? There's going to be more regulation on a number of things. One of the big unknowns is the fracking oil in energy industry, so probably banks. So do be cautious on that. And again, if Biden wins and the Senate flips to Democrats, expect to see much stronger regulation across the board. Again, that's going to hinder the broader economy and most of business activity. Okay. Now the third one's interesting. It's fiscal stimulus. And there's a lot of debate right now, and you can see with the Democrats really negotiating the stimulus package, while a lot of Democrats are also pushing for it, as well as the Republicans. Generally, most people, I think, believe we need continuous support until we're out of this, until we're fully out of the recession. But I think if Trump stays in office naturally, and there's a Republican Senate, I think you're going to continue to see the stimulus package. If you think about Biden winning with a Republican Senate, again, it's going to be some headwinds for stimulus. Right now, the Democrats are not very pro-stimulus, which is an interesting take. Typically, you need to inject capital in the economy when the economy is having a bad day, which it is. Okay. Now, if Biden wins and the Senate becomes Democratic, you're probably going to have less harsh negotiations and very, very minimal chance of lame duck scenarios. So believe it or not, I think an all Biden, all Democrat, Senate and president would probably amount to a sweeping stimulus that would make the party look better. Okay, so it's a unique situation. I think generally both parties agree underneath of it all that we need stimulus in the economy. It's just a matter of the process for making that happen. Okay. The last one is trade policy. Really big, really important. We know Trump is, he's a protectionist at heart. He's not very fond of doing international agreements, globalization, TPP, or any sort of, the grander international trade policies, which is interesting. And that's a negative for the economy and the equity market. I think when you flip-flop to Biden, I think you could expect, even with a Senate that's Republican, you could expect better trade negotiations. You could probably expect better ties with pulling back some of the tariffs on Europe, for example, or Canada. So in general, I think if Biden wins, you're probably going to see some favorability on the trade policy versus Trump. Then, of course, if it is with Biden and a Democrat Senate, you're going to probably see sweeping changes to the trade policies. And again, so my point in all this is there's positives with Trump and there's positives with Biden. There's negatives with Trump and there's negatives with Biden. In general, no matter who goes in office, from what we're seeing, broadly speaking, it's not going to be as catastrophic from an economic or equity market standpoint. It's it's going to be a balance, and gives and takes will happen throughout the process. Okay. And the last thing I want to talk about is what this means for the current stock market. Now, I just checked today the S&P 500 PE ratio, and if you don't know what that is, check out our other videos about my favorite valuation metrics for stocks. It's around a 35, right? Second highest PE ratio in history. And one of the drivers of that is that it's an equation, right? It's based on profit earnings of companies, and it's based on what people want to pay for $1 of earnings. So mathematically, if earnings reduce, then that PE goes up. Mathematically, if people want to pay more for $1 of earnings, that PE ratio goes up. And obviously the inverse happens from the opposite. Now, right now, a lot of economists believe it or not, are saying that we're still in an early stage recovery or a late stage recession. And so what happens in these times is corporate earnings are compressed, and the stock market is predicting, 6 to 12 months out, and they do see hope in the market. So oftentimes coming out of a recession, PE ratios are elevated. And so I think what we're going to see is probably contraction in PE ratios in the next 9 to 12 months due to the increase of corporate earnings, and thereby you're paying less for $1 of earnings, and that's going to shrink that PE ratio. So regardless, I think what that means, whether a Biden or a Trump camp, is that you're going to see the valuations of stocks probably not implode all that much. It'll probably, it'll probably continue to see what we're seeing, which is growth in earnings, growth in the values of stocks, and probably a decent return for stocks, generally speaking. There is some risk. It's all segment to segment. I think, again, airlines, entertainment, hospitality, those are some areas to be cautious around. But a lot of industries are doing just fine, and I think the numbers will show that in due time. So that's my take. I'm really curious about what you think of all this. I'm hoping this stirs up some conversation. This is a really important topic for all of us to consider, how to be strategizing your portfolio with the incoming president in the upcoming election. So let me know what you think, and be sure to subscribe. We're going to have more topics like this coming up, and talk to you soon.